Bill here with another edition of Metal Minutes. Today is Wednesday, March 3rd, 2021. We're in the middle of a paper smash going on, but the encouraging thing to remember if you're a metals investor is it's not affecting us that much. And we'll talk about that in just a minute. But today for gold is currently down 5% for the week to 1725. Silver is also down on the paper markets 5% for the week to 2650. Platinum is down 6% to 1202, and palladium's down 1% at 2382. Now for the 1 year time on the paper market, gold is up 5% for 1 year, silver is up 54%, platinum is up 36%, and palladium is down 5% for the 1 year mark. Now what's going on is we have some severe paper selling by the big bullion banks going on, and it seems that they're trying to get that price as low as possible while they accumulate physical. And we have a link to an article that discusses why they're needing physical now. It has to do with the Basel III international banking regulations that provide banks with double the amount of credit for physical bullion reserves that they hold. Now previously they could use paper contracts that physical delivery was never an issue. But now those paper contracts are not going to be treated the same as physical bullion. And there's a deadline coming up, and the article touches on that in more detail. I encourage you to take a look at that if you're interested. Now, silver has a similar process going on, but it's more from the Silver Squeeze group as a grassroots campaign to try to break silver free from the market manipulators on Wall Street. And so far that seems to be going really well. They just raised over $50,000 on social media for an ad campaign whereby they're buying billboards in various venues across the country. You may see one there near Austin. If you're in Austin, you might see one up somewhere along I-35. And they'll be at various places throughout the country. But there's a lot of pressure on physical, and we added to our physical pile last week, and I can tell you the price for physical, even though the spot is down 5% on silver, the physical has barely budged. And so there's a little bit more value in gold and in platinum this week, but the physical price is quite disconnected from the paper price that's quoted. So it's becoming less and less relevant. Another story that you hear is that gold is down because interest rates are rising. Well, that's a familiar tale, but when you look at how little interest rates have actually risen, and then you compare that to the fact that in the Treasury market, real yields are negative out as far as 20 years. So who wants to put money in something for 20 years and earn a negative interest rate? Some people also say that gold and silver have zero yield, and so it's better to put it in something that's paying interest. Well, zero interest is higher than negative interest. And so when we look at the last time that we discussed the Basel III banking regulations in 2019, we wrote an article informing our readers of what was coming up that's now coming to pass, and we said that it would gradually put pressure on gold prices. And that's exactly what's happened. Since not quite a year ago in April of 2019, gold has come up 36% as we draw close to this deadline for Basel III. And some analysts are calling for a further increase in the price of physical up to $400 or $500 more in the next few months. And so we see also the same pressure building in silver for different reasons, and they're calling for another $10 to $12 in the same time frame on silver. So we continue to be hopeful and have positive thoughts about what's going on in the physical market, even though some of the paper news sounds scary sometimes. But don't let that bother you. Just look at what the physical is, and that's really why any of us own it to begin with. So thanks a lot. We'll see you next week.